there are other investable assets out there. And you don't have to go after everything like I do. My goal is from Wealth Matters is to teach everyone about what else is out there. So I try out everything just for the sake of me understanding and giving the knowledge back to the community.
On today's show, we have Alpesh Parmar, an entrepreneur, real estate investor, and the host of Wealth Matters podcast, where he interviews the best investors across the U.S. every week. Alpesh is passionate about helping busy working professionals build long-term wealth using investments in real assets. He wants them to build supplemental income and live a stress-free life, like the rest of us, I hope. Alpesh, welcome to the show. How are you doing today?
Hey, thank you for having me, Joe. And I'm doing great. Can't complain.
So what, give our listeners some insights about yourself. What have you been up to and kind of what do you do over at Wealth Matters?
Sure. So I live in the San Francisco Bay Area. So of course I am from IT, right? When I got laid off back in 2009, I kept thinking about creating supplemental income, passive income, multiple streams of income. Never took the steps, but 2011 I became accidental landlord, and that taught me that real estate is one hell of an asset. There are gazillion of millionaires pretty much which were made because of real estate. So I started learning more and more about real estate, and pretty much 2015 is when I actually took the step and started acquiring real estate out of state. So that's when the journey started. And 2017, 18 is when I realized that I need to spread my knowledge. So I started wealthmatters.com, Wealth Matters podcast, started investing in large scale, big scale apartment buildings. Then I moved on. Right now, Wealth Matters focuses on recession resistant assets on real estate side. I focus on mobile home parks, senior housing facilities, and self storage facilities. So those three I studied back in 2008 and 9. Those three did not get clobbered. They actually thrived and they did pretty well. They survived and they did pretty well. So I wanted to focus on those. So this is what we do. We buy large mobile home parks to senior housing facilities. We rent them out, of course, collect the rent, and my investors get paid. But you can see my head, crypto dad, right? So crypto, I became passionate about it back in 2015 as well. I'm like, this is something, not crypto. Again, people do not understand crypto is one type of blockchain, right? So blockchain is what got me into it. I'm like, this is interesting. It's transparent. No one can just bluff. Everything's available for you to consume, right? It's so easy, and it's literally a real general ledger, right? So I started investing, and then back in 2018, I had started my own mining company as well, which I folded it up at wrong time. So we started in 2017, we stopped mining in 2019. So my other side of the business, my own portfolio, I have 50-60% real estate. I don't do a lot of stocks, but crypto got me hooked to it. And so my other side of the business, of course, I invest, but we do a lot of Bitcoin mining. And I know you and I had spoken about that. Actually, we last year we launched 4 different Bitcoin mining funds, and we ended up raising over 50 million. So many people are interested, even though the market is correcting and it's a volatile market. It's going to go through its ups and downs. But we just closed on our Bitcoin mining fund 6 as well, literally last Friday, where we bought similar to, when we buy distressed asset in real estate, we bought distressed machines because, a lot of these companies got over leveraged. And this is why we never took leverage. Whatever we bought 50 million, we raised 50 million, we bought machines worth of 50 million, not 200 million or something, because we wanted to make sure we survive during this downturn. That is the key. So right now we were able to buy some machines, not some, worth of $17 million machines, which were sold for over 50 million. We just got it for 17 million, and they are up and running. So we don't even have to wait like we had to wait during our earlier mining fund. So we are literally mining as of today, and we'll start distributing investors from next month.
All right. Well, we'll go into some more details there because I'm sure people want to hear about that, right? Because everyone always talks about what about mining, but really no one ever has any answers. So, what I've seen is people on the tech side, tech including crypto, always want to have exposure to the real estate side. And then real estate people kind of get jealous and want exposure to the tech side and the upside that's there because sometimes that's a little bit higher return. So Is it
Yep.
just that people want what they are not in, or what do you think the draw or lure is to kind of invest in that other side?
I think real estate is still the way to go, but you got to keep your eyes and ears open, right? And there are other investable assets out there. And you don't have to go after everything like I do. My goal is from Wealth Matter is to teach everyone about what else is out there. So I try out everything just for the sake of me understanding and giving the knowledge back to the community. But I would still say you got to have some gambling money, some money you are not afraid to lose. It could be 0.5% of your portfolio, 1%. I'm up to 5% of my portfolio in cryptos because I'm okay with losing that money. But also, I know that I'm going to do good with that money. I'll be fine in next 5 years. Again, a lot of people, when they start playing with stocks, options, and cryptos, when they start and they see beginner's luck and then they buy in and out, right? Their goal is short-term income. That is not what I see. I look at long term income. So you are right. A lot of real estate guys, actually, most of my investors, they invested in real estate and then they moved over to crypto because of the knowledge I provided, right? Every week I kept talking about it, that this is how it works and this is how you can generate additional income, staking and this and that, right? So, and the same thing with crypto guys, because also even stock guys, right? They made a lot of money in last 2 years if they timed it right. So they were like, okay, now we want to put the money in the safe assets, right? Some of this so that we can continue to generate income and it's a hard asset we can touch and feel.
So when it comes to the real estate, are you guys sourcing your own deals and acquiring them, or are you guys partnering with other operators out there?
So mostly we are partnering with other operators, right? And the way figured it out is that I tried to do one on my own, and then of course I had a team, but it was pretty hard doing it out of state. So now I'm working with operators who are located there, right? So I have for mobile home park, I'm only working with one operator, not three, not five. So we literally partner together, work very closely. Same way in senior housing, I'm only partnering with one partner and self storage. So that way, I'm focused. I don't have to perform due diligence on the operator, right?
Yep.
Once I have validated this operator, vetted him, then I know that I'm going to work or her, I'm going to work with them only, right? So makes it easier.
So for everybody listening, what are some criteria or requirements when you're looking at these operators to invest in, or even these general partners like yourself? What should people be looking for?
Sure. So one very important is track record. Don't forget about that. That's the main thing. Don't look at the deals. Don't look at the numbers. Numbers won't matter in the end, but the track record of that person or those two guys, three guys or operators, right? Second, how long, if it's more than one operator or partner, like in my case, the operator is there as well as I'm there, how long they have been working together. That's another key, right? Because you have to make sure you are going to hold this investment for 3, 5, 7 years. Have they gelled well, right? You want to make sure about that. And third, I would say one of the pretty brightest mind told me that if you can find out about those operators even in more detail, what did they do 3 years ago, 5 years ago, 10 years ago? Do they even ask them, have they had any bankruptcy? Even ask them to check if you can run background check on them. And I do that. I don't even ask them. I every time do it. I don't need social, right? You can just go to who is lookup, and there are so many ways for you to just run background check by phone number, by email address, and then by name, right? So that gives you pretty good idea. I made a mistake of not doing that 5 years ago, and I lost every penny in that investment because later I found out one of the partner had a bankruptcy twice in last 20 years. So lesson learned now, those are the three things you want to look at first for the on the partner side, right? And then move on and look at the location because real estate, the most important thing is location, location, location. But first, move this out of your way. Because once you become comfortable with that partner and you know that this is going to work, you may invest with them again and again. So you don't have to do that due diligence. So you don't need to go to 10 different operators and try to invest to diversify. That's the one of the worst ways to invest, right? You want to pick two or three and then diversify with them in different areas or different assets.
So that's one good point. So my buddy, I think, has like 20 plus he made in the last few years because he kind of wanted to get a little bit of taste, we'll call it, from all these different operators. And, he's trying to figure out along the way. So your key points are a lot less operators, but a lot more due diligence and a lot better track record.
Yes.
Instead of that spray and pray, more narrow in on the few that you believe are the best.
Yeah, and so that's a great point as well. Like 20 means he's never going to build the rapport with those operators. But when you reinvest with three operators, now you build a rapport. Now, most of the time, this guys can text me right away and I have to respond because I know these are important investors or they understand what I'm doing. And in the end, most of my business is referral. Because when I started, I'm so responsive. I take care of them. They're like, okay, my mom wants to invest. My cousin wants to invest. My friends. So I would say 90% of the time, it's just referral.
At the end of September here, I was at Quest Expo, self-directed IRA event in
Yes.
Texas. And it's very interesting because, if you're coming in and not quite sure, you roll in and there's a whole bunch of booths. Everyone's offering a real estate deal, 15 to 20%
Yes.
IRR. They all look the
Yeah,
exact
that's
same thing,
standard.
right? They're all the
Yes.
performers look the same, 15 to 20% IRR, 3 to 5
Exactly.
years. And you're like, well, are they all just great? Or, is there something else behind the curtain? And what you're, pointing to is, more in depth on that track record, checking even their personal background, what they do with their life, and kind of forming your own opinion around that.
Right. And great point again that, as I said earlier, numbers won't matter in the long term, right? Does it matter if you made 15% or 16% over 5 years? No, right? So that's why all of the performers are same, 15 to 20% IRR. So what happens most of the time when even I started investing, I just jump onto the deal. Oh, I like Atlanta market. Oh, the numbers are 20% IRR, but that guy is giving me 18%. But those are just pro forma. Think about this 20% may become 14, and the 18% guy may still give you 18, right? So don't look at those numbers yet.
And let's also evolve this, right? And that is what we've seen in the last year, especially in the crypto and tech side, and even on the real estate, is that people have used the last 3 to 5 years track record to kind of raise that
Yes.
next round, right? Or in the venture side, more or less, they use those unrealized gains, right, to kind of boost that IRR and raise capital. So, the
Yeah.
hindsight's 2020, but moving forward, there's no guarantee of that projected return, right?
No, no, I think that's 100% correct. As I said, it's just pro forma, right? Things change, things evolve. No one thought that the government would go after interest rate like this, right? Within 6 months, we are at close to 7% from 2.8%. That's ridiculous. No one would have thought, right?
No, we're breaking records and we're breaking things along the way, right?
Yes.
So, also for those that are looking to get real estate exposure, they may not have a certain niche that they're familiar with, right? You mentioned senior housing, mobile home parks. There's been a lot of talk the last few years on multifamily. Trends may also change. And so, what's your take on the next 3 to 5 years and how do you view, trends moving forward?
So trends moving forward, I would say the biggest issue right now in US and most of the part of the world is the affordability, right? As we know that inflation, Fed is trying, and you and I know that it's not easy to bring it back from 8% to 2%. It's gonna take significant amount of effort, and that would mean a recession. Right? But even then, affordability on the housing side has been the biggest problem. And with the interest rate rising, right now, a lot of people are just they don't want to get in the market. So that is why I think apartment buildings would continue to do good. But again, it will depend on the location, right? And the kind of asset. But mobile home parks would do amazing just because of the affordability factor, right? Though some of these people would get kicked out even from apartments, right? Or they would want their own space. And by moving to mobile home parks, they have their own space like a house, right? And they're not sharing walls, but they may be paying same rent as an apartment, right? So I think a mobile home park, we will see that it would continue to do good. And the problem with mobile home park on the other side is that governments don't allow mobile home parks. There is no new construction pretty much. If you had a land which is grandfathered in and it's approved for mobile home park, then yes, you can build. But right now, most of the counties and cities do not allow new construction of mobile home parks. So the mobile home parks which are existing, they are going to thrive because there is no competition, right? Of construct new construction, like in single family and multifamily, there will be competition from new construction. On the other trend side, second, why I mentioned self storage is because a lot of people, when they lose job or they want to downsize, they end up keeping their prized possessions, right? And where do they move all that? To a self-storage facility. Instead of paying, let's say if you are going to pay $2,000 per month for an apartment building, a two-bedroom apartment, you may have to pay 2,500 for three-bedroom. Instead of paying half $500 more, they can pay $50 more and just store their stuff somewhere. And the third, why senior housing on from the trend perspective is that by end of next year, seniors would be the largest population base in US. And that is a growing trend in most of the parts of the country. As you know, Japan, almost everyone is 70, 80 plus, right? Because they were working so hard, they never thought about family. They don't even have kids. China is going through that transition now because it was a one kid policy and they now changed it, right? Now they are allowing it, but because of that, their workforce is aging as well. But US is the biggest because the baby boomers are have retired or retiring, right? And they are moving to that senior space, and they are going to need a place to stay. And I think it's the best of both worlds where we provide them quality housing, make money, but also they have a nice place to stay. So trend wise, I think those are going to do great. I see also car washes are doing
I
great.
see that.
Yeah, so it's just everyone is moving into it. So I think it's the same kind of transition we went through in apartment building to mobile home park to self storage, where it started changing hands from mom and pop industries to large corporations like or syndicators like us. Car wash industry is also going through same transition right now. I see laundromat is going through same transition, and people think if we are not going to have a car, why do I need car wash? No, actually, if we are going to live in the Uber Lyft economy, those people have to wash car every day, right?
That's true.
We don't, but they have to because you want to provide the best ride possible, get the highest ratings and whatnot. So if you think about it, it's needed. Same way laundromat, you are thinking, oh, everyone has washer and dryer. No, this new generation, the Gen X, Gen Y, they don't like to do laundry at home even. They just want to drop it off and get it done. So the laundromat where you have fold and dry service and whatnot, they will survive. They'll do great. So there are a lot of trends morphing right now, which is interesting when I'm watching them.
So, do you think, since a lot of these new we'll call mobile home parks aren't coming to market or being built, do you think like
Right.
this tiny house movement? I'm starting to see some of these developers putting these, I'll call them like kind of tiny houses. It's
Yes.
almost like trying to do the mobile home park, but with a tiny house. Like, do you think that
Yeah.
has some legs, or what's your thoughts there?
I think it has some legs, but only in expensive markets, where the affordability is a big problem, right? Because their cost, when I looked at it, Mighty Buildings, I've actually personally invested in Mighty Buildings because it's a startup and this
Mm.
is what they do. And there are tons of them, Boxable, and I would name a lot of them. When I looked at it in detail, I realized their cost is remains the same. So there is no cutting cost. So now the problem is the market. Let's say we pick Birmingham, Alabama, where I can buy a nice, build a nice house for 200 grand, and this guys will give me a tiny home also for 200 grand. What am I going to choose? Right? But in Bay Area, in San Francisco Bay Area, they are building it for 350 grand. And if you want to build a nice house like that, it's going to cost you 800, 900 grand, then it makes it worth for the effort, right? So I would say they will survive and maybe thrive as well in the markets like San Francisco, Austin, Denver,
Yeah.
Phoenix, some of those markets. But it won't work in Midwest and Northeast markets where it's already pretty cheap to build a house.
Let's maybe also then address cap rates, right? Because I think that's probably one of the biggest things people are going to have conversation around now because
Right.
typically with interest rates rising, cap rates kind of also start to expand, right? And
Yeah.
when you underwrite, you're typically making projections for 3 to 5 years out, which right now is just like, who knows? People all predict that rates are just going to come back down, but
Yeah.
that might not be the case because everyone's kind of on that side of the trade. So what's your thoughts on maybe where cap rates will go and maybe how that impacts some of the underwriting or the performance of the deals in the next few years?
Oh, that's a great question, man. I'm personally worried about it as well. So right now, every deal we look at, we are being ultra conservative now. So before, we'll see a five cap deal, even in mobile home park world, and sometimes six cap, depending
Yep.
on the if it's a tertiary market or secondary. we're like, okay, it looks like this is a good deal, right? Now we are seeing those deals already getting listed at 7, 8 cap rate. So they are adding like 2% increase already within 6 months. So I agree. I think cap rates next year are going to expand, right? And maybe not in the apartment building space, but in mobile home park space, we'll see 8 to 10% cap rate. So definitely we have to keep an eye because interest rates. So yeah, our underwriting is changing right now. We are being very ultra conservative, as I said, and don't want to look at if anyone is offering now at 5, right? No, it's not going anywhere right now.
Seems like a lot of different buyers, have their pencils down and kind of because most things won't underwrite to where they're trying to be conservative to meet those projections. So
Yes.
they're kind of just waiting to see what happens, as we approach 2023. Is that what you're seeing too?
Yes, yes. So we are still looking. Actually, we are underwriting a 5 park portfolio in Tennessee right now, and even with the interest rate change, our underwriting hasn't changed. Yeah, because we were already buying it at right now. It's operating at 5, but it has so much value add component to it that even when it's fully done, I think we are just with our money we are looking at like 9 cap. So we knew that, going in. So we are continuing with that deal. Even the interest rate side is not changing our evaluation because for that deal, we knew that this is coming. We just didn't know that it would this fast, but we knew that the interest rates are going to go up. But you are right. Now, after this deal, we are going to, look at 2023 and even continue to say no to more deals than, yes.
So you're kind of mentioning, like we're talking in the range of let's call it 3 to 9 caps, right? And typically
Yes.
any type of that language in the crypto sector doesn't turn anybody really on, right?
Yes, exactly.
And so, people in the crypto sector definitely also see Terra Luna blow up and, also see those
Yeah.
high yields blow up. So they're looking for areas to participate within the ecosystem that can still give them a reasonable return, not only by just holding crypto, but other parts. And that kind of brings me next to the Bitcoin mining, right? And you've been participating in that. I kind of always get the outside info. I'm not very knowledgeable here. So for all of our listeners, why don't you maybe break down how that works from an investment standpoint and what that pipeline looks like?
Sure. So what mining means is we are producing like gold mining. We are producing Bitcoin in this case, and as we know, Bitcoin is a POW, proof of work mechanism, right? So the computers or the machines or the miners, we call them miners as well, they solve a puzzle, and because of that, when they solve, they get a reward in form of Bitcoin, right? And as we know, just a couple weeks ago, Ethereum was also on proof of work, which moved to proof of stake POS mechanism. So now the computers don't have to work, but it's the staking of Ethereum by people like us will generate or mine Ethereum, right? But Bitcoin is going to stay on POW or proof of work mechanism. The idea is that, because as you can tell, I continued to invest in real estate. I was investing in crypto, not as much as real estate, right? I liked it. But then when we were mining, I kept thinking about it. And when we stopped mining in 2019, and then I found my partner, he had a lot of money as well as a big team behind him. So we realized that, this may be the time to jump in because now people are talking about Bitcoin. This was July of 2020. I can see that everyone is talking about Bitcoin. 5 years ago, when I wanted to talk about what is it, we don't care, don't even talk. Right. But you saw the shift from March of 2020 when COVID happened, and by July, August, everyone, oh yeah, we got to own Bitcoin and Ethereum. So I'm like, okay, now people understand what this is, and institutions started coming in. So 2021, we thought, why don't we come up with a mining mechanism where investors can invest and all of us benefit? And so, but because we both of us came from real estate world, our goal was to figure out how we can mimic real estate with cryptos. So, because real estate, two things it gives me: one, cash flow; second, depreciation, right? So, I don't have to pay any tax on this cash flow or any other passive income. So, that was the big driver for me every time I invested in real estate, right? Because it's not only hard asset, but I look for cash flow, and I don't want to pay any tax legally, right? This is how Trump's, Ted Turner's, or Bill Gates don't pay any tax because they are smart, right? They invest in real estate. So we wanted to marry that into Bitcoin mining. So we thought, like, you can invest or buy stocks of Mara, Marathon Digital, Riot. They are also mining company. They don't give you any dividend. You don't get any cash flow, nothing. You only see that they're mining, but only when you sell your stocks, you get paid. Or if they something else happens down the line 5 years, right, and they start dividend. We wanted to start cash flow from day one for investors. So what we did is that we'll buy machines in whatever the Bitcoin number of Bitcoin these machines generate every month, 90% of the profit. We keep 10% for any issues with, let's say, a cable breaks out or machine breaks, right? We have to, 90% of the profit, we distribute it to the investors. So that was the key. So that also becomes passive income. So if you had passive loss from somewhere else, from real estate, you can write this off. But to make it icing on the cake, we also realized that because this is a business, we can write off entire hardware. So we are able to write off 90% of the investors in the investment in the first year using bonus depreciation, exact same as real estate. So now we were able to marry both of the benefits, cash flow and depreciation in the Bitcoin mining world. And that is what enticed a lot of investors to get in. People who were in real estate, they wanted to get in. People even who were in crypto because they already knew the benefit, but they are like, oh, this way I have a lot more downside protection, right? So like in our case, when we started Fund 1 through Fund 4, Bitcoin was between 69,000 to I would say 45,000. Our cost of mining is still 14,000. So unless Bitcoin drops below 14,000, we don't have to stop mining. And the fund six, because as I mentioned, we bought distressed miners, our cost to mine Bitcoin would be 10 grand. So literally we are okay till, so that this way investors are, even when the Bitcoin is getting down, they are getting the cash flow or distribution every month.
I mean, I heard that one of the most important factors is definitely can be obviously, well, the cost of the machines, but also the cost of electricity, right?
Yes.
How have you guys been able to navigate getting good pricing?
So we work with, of course, we host our machines with Compute North and Core Scientific. These are some of the largest hosting companies in the world. Marathon Digital uses Compute North, or Riot uses Core Scientific, right? So when we sign the contract, these companies already have a contract with the utility companies, right, where they are paying constant energy and they basically turn it around and sell that contract to us. So all of our funds, we have signed like 3 years contract. So we exactly know how much yeah. That's why our blended in cost, we already know how much that would be. Only sometimes it fluctuates because of the hash rate or the difficulty rate of mining, but our electricity remains same. Yeah, if we have to cancel that contract and get a new contract right now, the utility electricity rates have gone up like crazy, right? But also on the other side, we are also mining at facilities where we are not only relying on electricity or power. We like our facility in Nebraska has a solar farm and wind farm. So if something happens to electricity, right, power, we can survive for 2, 3, 4 days without any issue. So we have backups as well. We were also looking at a facility in Ohio where there was nuclear energy available. We didn't go through that one, but right now we are mining in the state of New York, right next to Niagara, using hydro energy, right? So a lot of time, these utility companies actually produce a lot more electricity than they need, and that goes pretty much, if they don't use it, it's gone, it's wasted. So that's why Texas has been opening arms to Bitcoin mining or crypto mining, because they have so much of surplus energy, and that surplus of energy they want to sell it at cost or even below cost because they just want to get rid of it.
You know, most people obviously are going to ask up front how profitable is, or what are some expectations around that when they make an investment into Bitcoin mining?
That's a good question. Again, it depends on the Bitcoin price, which is what we realized after Fund One. So, just to put numbers in perspective, Fund One, we started mining July of 2021. And within a year, we have returned over 60% of the capital. But I would say that was the best case scenario. That was the best fund we did, because Fund 2, Fund 3, and Fund 4, we are about pretty much returning about 1% a month. Our target was about 4% a month, but because Bitcoin prices have gone down, we are still able to continue to do 1% a month. Again, we thought that yes, we will be able to return entire capital in couple of years. I don't think that is happening now. With Bitcoin Mining Fund 6, the one we just closed, I think we can still return even because our pro forma model, even if the Bitcoin price stays below 25 grand for next 3 years, will be able to return their capital because just the cost of the machines, right?
So how important is it to, I mean, it's always talked about, but how important is it to make those investments during certain parts of the Bitcoin cycle?
it's a I think it's definitely important to make it when it's going up or it's on the upturn, right? It makes you feel good. But on the flip side, you won't be able to buy machines at this kind of cost, right? So now we are, because after we saw that we are able to buy distressed machines like this, that has become a huge deal. I'm always looking for this type of deals now because just think about it, for fund one through fund four, let's say we got investors capital in March, we are barely able to start mining in July of last year, right? So it took us 4 months and then it took us 6 months because of the chip shortages, supply chain disruption, all that. So your money did not even start work for 6 months, right? But in this case, because we bought distressed machines, we are already mining, we didn't even have to wait. The money started working from day one, and we bought it at one third of the cost. The same machines we paid between 8,700 to 10 grand, we just bought them for 3,700 each. So huge difference. Also, definitely there'll be more opportunities when the market is down, right? Because everyone is trying to run away from it. That is when you should jump in if you understand how the market cycles work. And as of now, I still think Bitcoin and crypto and pretty much every asset type will struggle almost throughout the next year. But remember, the Bitcoin halving is coming May of 2024, and that is going to be the biggest catalyst. And hopefully, by that time, all of this inflation recession talks are over.
Any other thoughts on when it comes to maybe entering or underwriting certain crypto projects or even crypto funds here over the next few years as they look to allocate?
That's a good point. So definitely, again, in those side as well, evaluate the team. Now it's more than ever to evaluate the team correctly. Before it was okay because everything was going up. It's like crowd. It did not matter which crypto project you chose. It just worked, right? Because everything was, the tide was taking everything up. But now is the time because you may be able to find great deals right now. But definitely look at the team, who the people behind are, and also don't go after crazy returns right now. Right now is not the time. Right now, it's important to look at how you can preserve that principle also while staying invested, right? Like in my crypto mining deal, everyone asked me, should we take, so we allow them to take Bitcoin distribution or USD? And they're like, oh, should we take USD? I say, no. If you believe in Bitcoin, at this price, if you are getting distribution, why would you want to convert it to USD? You already took the chance, a leap of faith. Can't you hold it on for at least 2 years? I'm not asking for 5 years. I'm saying Cathy Wood or Elon Musk say 500,000 of Bitcoin. Just hold it for 2 years and it's at least back to 70 grand, if nothing else. And you'll be very happy.
No, I agree. I agree. I mean, time will cure the market, right?
Exactly. And what goes up goes down and then it goes again, up again, right?
I know. I always like to say to people, I was like, listen, if your real estate and multifamily are these deals traded, as a security token or as a liquid asset, every time someone buy a value add, the property would dramatically drop because they get rid of tenants
Yes.
and they go to do repairs. And the value on a trailing three annualized would be that you lost a lot of money, but you don't even see that. You wait for that check in 3 to 5 years and you really don't realize that. But with
Exactly.
liquid assets, you see it every day and that affects your emotions. You need to think about the same thing. It's a 3 to 5 year lockup and you have a thesis why you're making that investment, right?
Yep, that's exactly what it is. And that's why real estate looks good because it's a hard asset, but it's also illiquid, right? You don't go on Zillow and say, oh yeah, after a month, my property value dropped. Let me sell it right away.
I agree. So let's leave off with one final question here, and that is, what is the biggest thing that you've implemented in your life that's helped increase your net worth?
Wow, that's a loaded question, man. So I would say a couple of things, and as you can see, the copy of my book, I am very resilient. I don't give up. I don't quit. Yes, I may fail, and I have failed, but that does not mean I gave up, right? I invested in something and I failed. That means, okay, I don't think I understand this, or maybe this is not my cup of tea. I'll move on. But I did not quit in the middle of the race, right? So that has been resilient. Second, I have implemented is called Miracle Morning, the book by Hal Alrod. I highly recommend people read. Is that it has savers, they call it as savers, and those are acronyms for S means silence, affirmations, A, V, visualization, E, exercise, R is for reading, and S for scribing. I don't do all six of them in the morning, but I try to do at least three of them. So I meditate, I exercise, and I also visualize every day where I want to go and exercise. So that is the second thing. And the third book I want to also mention is The Go Giver Club. It's a great book and it's about giving, right? It's very important while we are working so hard and trying to make money, we forget about giving. But that book, what it taught me that every time you give, you are going to get 10 times back at some point. Not a lot of
Yep.
time you give it to your friend and you're like, oh, that friend is not helping me or doing me anything, but it will come back from somewhere else, right? So don't think about it when you're giving that, oh, I want to get something back. Our philosophy has always been, oh, to get something I'll have to give. No, no, no. Just give and forget about it, and you will get something back at some point.
Well, I appreciate sharing those. I mean, that's some great insights. Obviously, is backed by a lot of experience. So I appreciate
Thank you.
coming out on the show today, Alpesh, and we look forward to seeing you again in the future.
Hey, I appreciate it, man, Joe. Thank you again.
The Joe Roberts Show.